You read that right. Last video I explained why I'm buying, and today I'm explaining why I'm selling. And I do have a good explanation for all of this. So today's video, we're going to be taking a break from talking about news headlines. I'm going to be giving you a portfolio update on why I decided to sell half of my stocks. But first, there's reason to celebrate because my portfolio has passed $23,000 and is currently sitting at $23,350 almost. And when I first started showcasing my M1 total, the portfolio was at $17,321, meaning it has gone up $6,028, which is just crazy to me. I mean, sure, it's peanuts compared to other financial YouTubers. Financial Education, he recently released his $887,000 portfolio, and I have a long way to go until I'm in the six figures, but my portfolio is growing steadily. And in a way, I hope my portfolio's average beginning and the growth that I'm going to be showcasing is going to inspire some of you watching that it doesn't matter if you only have a few $100s or even less to your name. You can always utilize the stock market to grow your wealth, and consistent contribution is going to be key and it's going to yield you big numbers in the future. So don't delay and start investing today. I personally use M1 Finance, so check out my description for the referral links, where I also have links to both Robinhood and Webull. And I feel like I say this in every video, but the key thing is to just begin investing. And you can always grow your income and contribute more later, but by starting now and starting early, you're going to let compounding take effect and letting your money grow into bigger money. In addition, if you haven't already, don't forget to subscribe if you want to stay up to date on how my portfolio is doing, because I'm going to be showing you guys the good and the bad, both the green days and the red days, and give you a sense of the reality of stock market investing. And this M1 total is actually spread between 4 of my M1 accounts. I have 2 Roth IRA accounts, one for myself and one for my wife. I have 1 taxable account for my daughter, and the last account is a taxable one as well, but it only gets the referral bonuses that I get when someone uses that M1 Finance link that I mentioned beforehand. And as you can see, so far I only have 1 referral, but hey, free $10 is still $10, and that portfolio has actually gone up 18%, so you can see I'm killing it with my $1.80 profit. Because this total amount doesn't give you any information, I'm going to break down the number to be more digestible and to be more transparent. I actually created this chart to show how my portfolio is doing, and you might notice this row specifically where I reveal my total deposit in addition to my market gains. I think this differentiation is important and it paints a more realistic expectation of stock market returns. Because you see the numbers that I'm showing on my thumbnails, they aren't just growing because of market gains. In fact, when the market was dropping big during the crash in March, it was my weekly deposit that kept my portfolio balance afloat. I usually deposit up to $350 every week, but recently I've just been putting about $40 a week for the past few weeks, and I think I'm going to continue to do so because with this current ongoing pandemic, I'd much rather use my income to beef up my family's emergency fund, just in case of any, emergencies. So the majority of my money is going to my Marcus high yield savings account, and it's always good for you guys to bolster your emergency funds, especially when it's very uncertain. You don't have to use Marcus by Goldman Sachs. There's other high yield savings accounts, I believe by Ally and other such brokerage and banks. So just find which one works best for you. The reason why I'm okay not putting any more money into my account currently and just letting the market go up or down, it's because I have close to $4,200 in cash spread across my 4 M1 accounts. So it's not really like I need to deposit more money right now. And if anything, I can always transfer the money over if I need to, or if I want to deploy more cash into the market. But like I said, right now, I'm just toning down the deposits until the pandemic becomes less severe, whenever that might be. So I'm just building up my emergency fund, and you guys should as well. But at the same time, always have cash ready either in your brokerage or in your checking or savings account so you can take advantage of any market drops or stock corrections that's going to occur. One final reason why I'm okay holding off on any larger weekly deposits is because my 2 largest accounts, they're both Roth IRAs. So I have up until tax day next April to contribute to whatever I have left remaining on my annual $12,000 contribution limit. And if anything, the portfolio balance, it might go up a couple hundred or thousands of dollars at once right before tax day. So if my thumbnail amount does suddenly make a huge jump, just don't be surprised. I'm just trying to make sure I contribute everything before the deadline. And yes, I kind of went off topic there, but I hope you appreciate how transparent I am and I want to be when it comes to my portfolio fundings. And if you appreciate what I'm doing here, hit the like button because it lets me know that these kind of contents is something that you guys want to watch. And if everyone enjoys it, I'll definitely be providing more detailed portfolio updates whenever they happen. So let's get right into the main topic of the video, and I'm going to now explain why I decided to sell half of my stocks. When I first filmed this video revealing my stock market portfolio in my Roth IRA number 1 account, I had a total of 50 different companies I was invested in, plus 5 bond ETFs. Rather than naming off all 50 companies that I was invested in, I'll just show you guys a screenshot of all 50 companies. So just take a moment if you want. You can pause it to go through which company I was investing in, or you can always watch that original video to get a more of an understanding of why I chose those companies. But after selling half of these holdings, I'm now left with these 25 companies. So starting from the very top, I have Alibaba, Alphabet, which is a parent company of Google, Amazon, Apple, Bank of America, Boeing, Costco, Disney, Dunkin' Brands, Facebook, Ferrari, Johnson & Johnson, JP Morgan & Chase, MasterCard, McDonald's, Microsoft, Otis Worldwide, PayPal, Procter & Gamble, Tesla, the Clorox Company, Wendy's, Uber, Visa, and finally Waste Management. From 50 stocks to just 25 stocks, and honestly, it was the right choice because 50 companies is just way too many for me to keep track of on a daily basis. In addition, as you can see, all 25 companies are set at 4%, and that's because I prefer the equal weighted method rather than the market weighted method, which can be dictated by a few giant stocks. For example, this is VOO, or the Vanguard S&P 500 ETF, which is one of the most recommended and held ETFs if you just want to invest in the United States companies and not worry about anything else. Right now, VOO holds 509 stocks. And you might think that you're well diversified between different sectors and industries. Actually, look right here. Almost 27.5% of VOO is invested in information technology companies. And what's scarier is that the top 5 weighted companies, the top 5 biggest holdings of VOO, which is Apple, Microsoft, Amazon, Alphabet, and Facebook, they're all tech stocks, and they make up 22.4% of VOO. So almost a quarter of VOO's value comes from these 5 companies. And even worse, these 5 companies, they make up more than 40% of the Nasdaq 100. And this is why you see the stock market hitting all-time highs, despite the ongoing pandemic, rising debt tolls, rising unemployment, and all these conflicts and social injustice and protests that's going on. It's because these tech stocks are benefiting from our current stay-at-home economy. If you were to peek through the curtain and you look at other sectors and other stocks like retail, hospitality, airline, and all those things like that, most of them aren't doing so well. But because the stock market once again is weighted heavily towards technology, it gives a false reassurance that all companies are doing well right now. But I do own shares of all 5 of them. I own shares of Apple, Microsoft, Amazon, Alphabet, and Facebook. But once again, they're each capped at 4%. Exactly like the smaller market cap companies I have, for example, like Wendy's, Waste Management, and Uber. And because all of my companies that I've invested in, both the mega cap stocks that are trading in $2 trillion like Apple, and other companies like Wendy's, which is about $6 billion market cap, this evens out and it doesn't allow my portfolio to be swayed by just the movements of big companies. And of course, sure, it means I miss out on massive gains that Apple and Tesla is going through after they announced their stock split. I like knowing that if hypothetically Tesla or Apple were to crash and burn out, it's not going to completely devastate my portfolio. And if you were to follow my equal weighted approach with M1 Finance, here are the several choices that you're going to make on how you want your portfolio to be split up. You can either have 100 stocks each at 1% for maximum diversification, or you can do 50 stocks at 2%, 25 at 4%, which is what I'm doing, 20 stocks at 5%, 10 stocks at 10%, 5 stocks at 20%, 4 stocks at 25%, 2 stocks at 50% each, or you can just go all in on one stock. Find out what your risk tolerance is going to be and also how diversified you want your portfolio to be. Like I mentioned, at least for right now, 25 stocks each at 4% is what I decided to go with. And the reason why I'm also okay downsizing from my original 50 stocks is because with my original plan of holding 50 stocks, I just ended up holding companies that I didn't really know that well. For example, some of my real estate and industrial stocks, Even though I have heard about them and read up on them, they weren't companies that I could, confidently deliver an elevator pitch on. And what's worse, because I decided to hold 50 stocks, I ended up choosing companies like Realty Income Corp, Pepsi, and Coca-Cola, which are all, by the way, great companies, great dividend-paying companies, but they just didn't get me excited about their growth prospects. I'm not bashing dividends or dividend investing, but I decided I wanted to grow my portfolio faster by choosing more companies that had more risk but also more rewards. So as you can see, most of my stocks that I've chosen are more growth oriented, and if you look at my current dividend yield that I'm going to be getting, it's not even 1.2%, but I'm hoping to make up for the lack of dividends with market appreciation. Right now, because I'm only 29 years old, I can afford to take on more risk than if I was closer to retirement age, where preservation of wealth and earning stable dividend income, that's more of a priority. So that's pretty much it, and these are now the 25 companies I've settled with. And right here you can see the percentage of each sector and the companies and what it is compared to my overall M1 Finance portfolio. As always, things will change, but when they do, I'll make sure to update you guys and be fully transparent with all of my portfolio changes. And while I'm confident that the stocks that I've picked is going to beat the average stock market return of 10% before inflation, there's always a possibility that, I suck at stock picking and end up underperforming the S&P 500. So, as an insurance policy against my own ego and, to test it out and see if I'm actually as good as I think I am, I decided on a different allocation for my Roth IRA number 2 account. Roth IRA number 1 is going to be 25 individual stocks, but for my Roth IRA number 2, the portfolio is going to be divided 50% ETFs and 50% individual stocks. So it's not going to be 100% individual stocks like my first one. And if you're curious to see and find out what ETFs and stocks that I've chosen for my Roth IRA number 2, make sure to subscribe to be notified of that portfolio review. And spoiler, I didn't buy VOO. As always, if you haven't already, don't forget to subscribe, like, and comment, and let me know how diversified you are, or what is the maximum percentage that you want each individual stock to be. If you want to get started on your investment journey, definitely check out my M1 Finance referral link down below to get your free $10 when you sign up and fund your free account, and that way you can be the second person who uses my referral link to get your $10. There's also links to Webull, where you'll get 2 free stocks when you open and fund your account $100. And finally, there's links to Robinhood to get your 3rd free stock. Thank you so much for stopping by. Happy investing. If you haven't started investing, get on that right away. And I'll catch you next time with more shenanigans.